We have about 200 of you from all over the world, so it's fantastic to have you here with three leaders in the financial inclusion industry. I hope, I believe from the lists of who signed up, most of you participated in a similar panel last April with the three same guests. And when we closed that panel, we said we would meet again. So here we are in the new year with the pandemic still upon us, with a lot of lessons learned. And I won't share much. I'm joined by my colleague, John Fisher, who's Chief Investment Officer of Accion. And we're here to hear from Shama, Taiwo, and Kurt. Just a couple of opening remarks because all three are Accion partners and we work closely with them. Some reflection is, compared to where we were in April, at least from the Accion perspective, probably in the big picture, things turned out not to be as bad or as worse as we expected. And institutions have done quite well, relatively speaking. Having said that, perhaps the surprise is that these challenges are taking much longer, and the recovery is going to take much longer. And of course, when we think of recovery, we think primarily more of our clients, the clients of our institutions who are suffering, who have suffered the most. I'm sure you've all heard of U curves, K curves, W curves. I'm not sure what curve it's going to be, but I do believe it's going to take much longer. So it's going to be 2 or 3 years of recovery, which is the bigger challenge that we all face, that we face in Accion, and that you'll hear the three institutions we have today face. And one common theme, I think the key word, and I hate to repeat it, but undoubtedly the key word of last year in my mind has been resiliency. Resiliency of our institution, resiliency of our employees, but more importantly, resiliency of our clients. Again, depending on which country you look at, somewhere between 20 to 30% of SMEs in most emerging markets have either gone bankrupt or have lost their businesses. Most of them are in the process of recovery or reinventing themselves as something new. And this is what provides the impetus and the challenge for leading institutions like Banco Sol, like Northern Arc, like Accion Microfinance in Nigeria, to serve the purpose of financial inclusion and meet the needs of the clients. So without further ado, let's go to our panelists. John will join us at the end with some closing remarks. And we divided this panel into three sections. We will be first looking broadly at what's happening in each country and what's happening in each institution. Secondly, we'll take a quick look back at what are the lessons learned looking back at the last 9-10 months. And then we will look forward at the future and open up to your questions. So as we did last time, let me start with Shama Fernandez. Shama is founder and CEO of Northern Arc, a leading platform serving more than 250 financial inclusion providers in India. And Shama, tell us a little bit first what's happening in India, then we'll go to Africa and Bolivia, and then we'll come back to each institution. So tell us in 3 minutes everything that has happened in India in the last 9 months. Now, just the highlights, as you know. What should our audience hear about what really happened in India? What surprised you? What are the highlights? You're on mute, Shama. If you can unmute yourself.
Esteban, as you can see, after 8-9 months of working from home and doing video conferencing, I still haven't learned my lesson too well. So apologies for that. So let me try to, squeeze in as much as I can in the 3 minutes, and starting really from, where we started. And I do quite agree with you that we are much better than, we thought we would be at that point of time when we had this discussion the last. While we are still not out of the woods, the situation is looking better, and the situation in India, I think, has panned out to be far better than I thought at that point of time. Let me just talk about two or three things that worry us at Northern Arc, and in turn, these are all things that really have an impact on the sectors of concern to us, which are basically the underbanked borrowers, low-income households, and so on and so forth. I think the first thing that really worried us at that point of time was the migration that happened in India at that point of time. And it was quite shocking. It was quite severe, and a whole lot of people lost their livelihoods. People were returning home and with no sense of where the future would take them. I think that is beginning to look a little better. It's not like people have come back; they have not come back in the full measure. But at the same time, it's not that we have as much of joblessness or people being as homeless as we thought we would be at that point of time. So people are returning, people are finding alternative livelihoods and so on and so forth. So that has panned out a little better than we thought. The second thing that we really worried at that point of time was that the spread of the pandemic and its impact on low income households and businesses, particularly in tier 3, tier 4 geographies, would be very severe given their lack of access to medical facilities. Now, of course, we have seen the impact. The impact has been severe in India, but it seems that it could have been far worse. Let me put it that way. And we haven't seen it as bad as it could potentially have been, just given how we started, 8, 9 months ago. The third thing we worried at that point of time, again, something that concerns all our borrowers and the kind of households we eventually serve, is basically the education of the children. We saw a lot of kids being pulled out of school. There was this entire move to virtual education, which a lot of the poor households can't really afford, and that's something that really bothered us. I think migration and the spread of pandemic is something that we don't worry about so much. I think education is something that we deeply worry about. I believe it's a big area of concern, particularly in India. I worry about children not returning to school, children, and particularly families feeling that the fees that they need to pay for the children sitting at home and studying is really not worth it. That's one part of it. The other part of it is when children get out of their homes, they are exposed to a different environment. Parents don't see them around and hence can't get them into the labor force to do other things. Now that kids are at home, that becomes a big challenge. And the third thing that we are seeing in terms of impact on education itself is just the impact on the girl child. If you have one smartphone in the house and you want to choose between, does the boy go to school using the smartphone or does the girl go to school using the smartphone, I think the choices in some cases are quite obvious, and that's something that deeply deeply worries us. So that's sort of on sort of, I would say, quickly the situation in India. I want to take 30 seconds to talk about the economic relief and the impact, if I have the time to, Esteban, but I'll be guided by you. You want me to go into
Of
that now,
course.
or do you want me to pause?
Go ahead. Thank you.
All right.
Keep
All right. So I think, of course, I think initially the efforts were very much in terms of providing food benefits, direct transfers, and so on, so that the immediate problem of the lockdown could be managed. I think at some stage, India as a country, just given how humongous we are, I think it was decided that it's every man for himself. And beyond the point of time, of course, it's not possible for the government to do everything. And I think that's really the stage where we entered into, okay, fine, now it's every man or every woman for herself. I think we got out of that situation pretty well. It could have been far worse than it is. I'm not for a moment saying we are in a great place. I'm saying we could have been worse. So that's sort of on the economic relief front. In particular, I do want to spend a few seconds talking about the financial sector. I think there were a slew of measures by the government and the central bank to really reduce the debt burden, starting from moratorium, restructuring, which pretty much we saw across all markets. There was a significant infusion of liquidity through various schemes, hoping that the on lending would happen in term, and an increase in money supply to the borrowers who really needed it. We saw a reduction in interest rates and so on and so forth. So I think the financial sector did manage that period quite well. And some of that is now beginning to reflect into some of the parameters. So for example, we didn't see layoffs happening to the extent we expected them. We still see people being employed. And some of the high frequency indicators seem to suggest that the economic activity is inching back. So for example, the index of industrial production is showing recovery from October. Power generation, interstate movement of goods, consumption of petroleum products, the bond markets seem to sort of reflect. The equity markets in India are just going berserk. I have no idea why, but they seem to be kind of almost at an all-time high. So I think from a financial market perspective, it is beginning to kind of look a lot more positive, and we see the money supply actually returning back, including to the clients that we actually address. So let me take a pause there.
Thank you, Shama. That was excellent. That was a great overview. Taiwo, let's go to you. And there's a couple of reasons why we're going in this order. I think India, as you were just finishing, Shama, did do a lot. on the recovery from the government, and you'll see the opposite extreme, I think, with Bolivia, and I think Nigeria is somewhere in the middle. But Taiwo, how do you see it compared with where you saw it 9 months ago? And tell us a little bit what's happening in Nigeria today. Taiwo, you're also on mute. If you can unmute yourself, thank you.
Thank you. Nice to be here. I think Africa, in recent times, prior to the turn of the new year, got some accolades from the world that we've been able to manage the pandemic very well. But starting from January, there seems to be a significant spike in what is happening, especially in Nigeria. Um, this year alone, confirmed cases on the COVID-19 grew by 491%. So as of December, during the first week, we had 17,148 cases. Now it's jumped up to 101,331 people that have been infected, and active cases grew to 76%. And if you compare that to what has happened, so prior to now, what you see is that there is heightened fear, there is heightened sense of um, concern that the pandemic is going to have a turn for the worse in 2021. So we also have increase in the number of cases that are tested, but also the number of deaths jumped from 455 to 1,361 cases. So you see, in every home, in every family, everybody seems to know who is either at the isolation center, someone who is recovering in isolation at home. So I won't say it's flat. I think we're entering into another period of the pandemic that creates a lot of challenge for the country. But that aside, I think for the Nigerian situation, you can actually isolate a few states across the country where you have this. So it may be easier to manage the eventualities because there are just about 5 states that constitute about 80% of the cases that we've recorded in Nigeria, with Lagos, Abuja, Plateau State, and Kaduna in Nigeria, recording very high numbers. Lagos being the tip of it. So but again, last year, you see in the last 9 months, beyond the pandemic, we see a situation where we also have some civil unrest, starting by what is popularly termed the NSAS protest. And the important thing about that protest is the fact that the people who were on the street protesting the, the poor governance, protesting the hardship, protesting the poverty level of the economy, are youths under the ages of 30. And they were able to sustain the protest over time for close to 3 weeks, and until it was hijacked, and then the federal government had to come in to stop the protest. And that was in October 2020. And in November, officially, Nigeria was announced to have entered the third recession. And we're hoping to come out of the recession very quickly. So while we might want to see as a country that the first 9 months was managed very well, what we began to see now shows that there's a lot more challenge. There are stress on medical equipment. The Lagos State governor at a point had to go to meet the president of Nigeria that the country is running out of oxygen to sustain the people who are in isolation center who have encountered the pandemic. So what the country is going into now, there are chances that there might be a second round of lockdown. Schools are still locked. Initially, schools were to reopen next week, Monday. But today, the federal government had come out to say that schools will remain locked because of the spike, because of the spike in cases. So schools are locked. Um, Erstwhile open event centers have been locked, and there are some states that have also come back to say we're going to reintroduce curfew. You cannot move between the hours of 8 p.m. to 6 a.m. And of course, these have economic implications. These have impact on supply chain. It has impact on demand chain. So it's been a huge challenge. But also in the last 5 months, if I may just talk a little about what the government has done is the forbearance measures that the government has requested that all financial institutions should give to their customers, and some tax relief that the government has also introduced. So for low-income earners, and in Nigeria, low-income earners are those who earn below $1,000 per annum. So now they don't need to pay taxes again. The income tax has been removed for all low income earners. So if you earn about $1,000 and below, you don't pay taxes again. I think this will bring some relief to to the citizen. Of course, there is also the extension of moratorium of principals and interest for loans that the Central Bank of Nigeria has given. And they've also encouraged deposit money banks, commercial banks, and microfinance institutions to also extend the same thing to their customers by granting some forbearance, by restructuring some of their loans. So we see this. We see the suspension of VAT and some tax relief on products and some things that are on importation, especially for agricultural implements and for medical equipment. So those are things that have happened. And while we think that we navigated 2020 very well, and it's not as bad as we think, there's liquidity, excess liquidity in the system, surprisingly. Um, Foreign direct investment still find Nigeria a place that they want to come and invest, and also they want to come and play. Uh, 2021 is giving a very totally different optics. And Africa is likely to be the last place where the vaccine will be arriving. So it's not yet uhuru for us. The battle is not over. I think we're picking up on another round of battle here in Africa.
Thank you, Taiwo. That's a great overview. We'll come back to what you've done in AMB. And Kurt, for full disclosure to our audience, I'm also chairman of the board of Bancosol, so I asked Kurt to be at the end. And from the Acción perspective, working all over the world, I don't think we've seen a country hit as hard as Bolivia in the last year. So Kurt is always understated, but you've gone through a lot this year. So for now, let's stick to Bolivia, and then we'll come back to Bancosol. But tell us what you've been facing.
Thank you, Esteban. Good morning. Happy New Year to everyone. Last time that we spoke, I explained to you a little bit what was going on in Bolivia. Unfortunately, we had what we could call a perfect storm, not only because of COVID, but also because of the political situation in the country. We had a transition government last year that actually stayed in office for just 1 year, which of course made that the decisions and the management of the economy that they did was not with the full strength that we needed. Decisions were partially taken. It was a weak government. So besides the pandemic, the political situation, and of course the economic situation as well. In the country, we had a moratorium of 10 months. You can imagine it was declared by the General Assembly or Congress, where clients didn't have to pay for 10 months, starting March, all the way till December. we could only receive voluntary repayments for interest and capital. To give you an idea, in the first months, April, May, June, for us in Banco Sol, we were pretty much receiving zero in terms of repayments from clients. And so that put a lot of stress on our financial statements, on our cash flow. And the idea, of course, for us at the banking sector was to get some kind of compensation in terms of liquidity from government. But again, having a transition government, the measures that were taken were too weak. The liquidity that was put into the system was not enough. So we basically had to lower our rate of growth in terms of our portfolio. That was one of the measures that many of the organizations took. Of course, if we don't have the cash flow coming back from loans, then to compensate that, the first thing you need to do is to lower your growth. If we look at the year-end figures, it's 2020, it's gonna be the year that Banco Sol has had the lowest growth in its history, only 4%. The usual rate of growth was between 10, 15, some 5 years ago, we were growing at 20, 25%. But because of this situation, of course, the liquidity being the bigger issue, we had to lower our rate of growth. Also, because of the whole economic situation, we needed to really be very careful who we were lending to. So that also had to do with our credit decisions, our credit analysis. And in that sense, I think that one of the positive things that we did was basically to develop virtual lending because we couldn't get out of the offices, we couldn't visit our clients. And so something that we had as pilot programs actually had the opportunity to be implemented on the field. And to grow that 4%, we basically used that virtual lending methodology. So it was positive in that sense. It's something that we are learning. We are still in the process of improving. It's not something finished, but if we look at the numbers of those loans that were given during that time with this virtual methodology, our portfolio at risk on those loans is 0. So it worked well. It was done. This is something, yes, that it's important to mention. Those loans were given to AAA clients, of course, clients that were active in their activities in the market, the ones that found opportunities during the pandemic. These being, for example, food vendors, all the ones that found themselves reinventing and selling pandemic items like masks and things like that. So we reached those clients and with this virtual technology. Now we're starting the year and we're still fighting with the politicians. They are talking about an extension of the moratorium for another 6 months. You can imagine 10 months last year, and they're asking for another 6 months this year again. And that, of course, is going to put a lot of pressure on the smaller organizations. In Bolivia, you can break up the system, I would say, in 3 groups: the larger banks, the medium, and the NGOs. I think the NGOs are the ones that would be suffering the most because of if they actually approve another moratorium in Congress, they might get hurt pretty bad. We've been talking with the authorities, trying to make them understand that an extension of the moratorium could be very, very dangerous for the system in general. Let's see, they understand it, but the political pressure is very strong, very high. This is a new government that is trying to cope with the economic situation. The country actually lost a lot of activity last year. GDP growth was -9. So you can imagine that we're still in a very difficult situation. For our plans for this year are still to work very hard on all the virtual technological solutions. I think that's going to be the solution to actually gain efficiencies and to be able to lend and to operate under this difficult situation.
Thank you, Kurt. We'll come back to that a little bit more. Shama, let's come back to you if you don't mind. Tell us a little bit more about Northern Arc. Maybe a 30-second overview of Northern Arc, and then thinking of your institution, just like you were talking about the country India, Northern Arc. What have you done differently? Perhaps what is the biggest challenge you faced, and where do you see Northern Arc today compared to 9 months ago?
That's right. So very quickly, Northern Arc is a platform that provides debt access to underbanked financial institutions, small businesses and households. And, I see this as a platform that is a very sort of diversified retail and, sort of institutional platform that pretty much provides access to debt to anybody who needs that access in the underbanked space across India. So we provide all kinds of debt, plain vanilla term loans, bonds, complex structured products, securitizations, guarantees, short-term, long-term, name it. And this has worked quite well for Northern Arc. We provided close to USD 10 billion plus of debt financing to a large number of financial institutions, businesses, and households over the last decade or so. And the portfolio is pretty much spread all over India. So that's really about Northern Arc. I just want to talk a little bit about what COVID did to us, or what the pandemic did to us, and how we really sort of address some of those challenges. Like most institutions would have done, we began by maintaining a high level of liquidity. So we went into this conservation mode to begin with. I think very quickly, we kind of realized that, we were not going to come to a grinding halt, and we had to do things differently. We leveraged our investment in the technology platform. It's called Nimbus, which we'd actually spent the last 3 or 4 years, building. And because we had sort of spent the time and effort into building that digital capability, we could switch to work from home almost instantly. It literally took us a day to physically ensure that people had their laptops and dongles and printers and whatever they needed to be carried home. And then we were online, like 100% online from day one. I think despite not having a clear visibility of when normalcy would return, we just continue to engage, with our investors, with our clients, to investors providing information and insight on what was going on, to clients providing a steady level of debt, even if at somewhat lower levels, through the entire period of the the last 6-9 months. We just didn't stop our activity. We didn't freeze. We continued to believe that normalcy would return in some ways, and in strange ways. We saw some of the really remarkable efforts that we had put over the last year or so fructifying during the COVID period. So we saw some of our largest borrowing facilities, both from domestic banks as well as global DFIs, coming through during the COVID period. We structured some of our largest and most interesting structured products for our clients during this period. Some of the things that we never imagined we would do in a normal period were things we actually managed to pull off in this period. To be fair, we also have provided for higher losses on account of COVID, and we did that. We took the losses in March itself in anticipation of what was coming up, and we'll see how that pans out. Despite whatever has happened, the losses we believe are well within the industry average, and we hope to recover some of that as we go forward. But nonetheless, the point I'm really trying to make is that the beginning of the pandemic, it seemed a little bit like doomsday, right? It seemed like, okay, fine, this is it, we're coming to an end. But I think very quickly we saw that life must move on. And we just sort of kept at it, whether it was at the institutional level, whether it was at the investor level, the client level, the employee level. And I think it was just the momentum that kept going. It was just like one foot after another. And it's been exhausting, Esteban. I was just reading one of these Harvard Business Review articles that says how to lead when your team is exhausted and you are too. So I think that's really what we did, and it does seem that we've come a long way through this, and it does seem that we are, of course, we believe we are strong, and we have survived this. A lot of our clients have survived quite well, and we are very, very happy for that. So yeah, let me take a pause there.
Okay, Shama, one question. Thank you for that. One question that came from the audience, which you've addressed, but I want to be explicit given the type of institution Northern Arc is. Has the pandemic affected your own ability to raise capital? The second part of the question is if it affected your ability to network and work with your institutions. The answer is no. You're working with them as much or more than before. But tell us, how have you managed your own funding?
That's right. Fortunately for us, we raised a significant round of equity just before getting into this period, So in fact, it was the last round of funding came in December of 2019. So as we went in, we are leveraged about 2 times, which is not great from an efficiency perspective. We are not efficiently leveraged today. But if you're getting into this kind of a storm of sorts, then I believe from a capital perspective, we are well stocked. So we didn't have any capital challenges at all. And that was a good problem to have. We didn't have pressures of repayment and so on and so forth. And to some extent, I would like to say that this was foresight, but I don't think it was, I just think that from a timing perspective, we were lucky that we had raised capital just before COVID happened. So there was no issue in terms of capital raise. I don't think we're going to have any concerns over the next year or so, by which time we hope we will have sort of put a lot of these things to rest, and we should be in a good position to sort of relook at another capital raise as we get there. In terms of engagement with other institutions, for example, we engage with many debt investors in the Indian capital market space. Those conversations have continued, and like I mentioned, we did a really marquee, large size transaction during the COVID period, and that sort of really it stands out, And in some sense, I always believe that periods like this can actually turn up opportunities, show muscle that you never thought you had, and some of those things really have panned out for us. I don't want to make it sound all rosy, Esteban. It has been a very challenging period, like I said, but I think we've survived well, and very, very happy that a lot of our clients have survived well. So, for example, initially there was a sense that we would see a lot of NBFCs in India folding up. We haven't quite seen that, and we are very happy for that, because we believe that small, mid-sized, large NBFCs across sectors, across geographies, all have a very important role to play in this ecosystem, and we are glad that they are all holding and not just folding up.
Thank you, Sham. I actually think you're summarizing quite well what for you, for Action Microfinance Bank in Nigeria, and for Banco Sol, the themes of exhaustion, the theme of resiliency, but doing better than we thought, and the theme of taking the opportunities and being leaders in your space, despite these enormous challenges. As you said, you cannot underestimate what we have been facing and we are facing, but all 3 of you have done tremendously well. I'm not sure we can say that about everybody, but all 3 of you certainly have. Taiwo, back to you in A&B. Now, speaking of your organization, what have 1 or 2 things that you are doing differently than you were not doing 9 months ago, and what have you learned in these 9 months?
Thank you again. One of the things we did was to look at our business model. So Action has been around for 14 years, and we operate in 12 states out of the 36 states in Nigeria, operating for about 90 outlets. And what the lockdown, what the pandemic has shown is that even though in 2016 we started the digital journey, but the pandemic created some high level of urgency for us to fuse together and to conclude on our digital journey. And that speaks to our serving our customers virtually, serving our customers remotely. And also it enables us to work on our business continuity plan. Even when we're not physically in the office, do we disburse loans? How do we continue to reach out to customers? How do we continue to do collection during the lockdown? So we had a team that worked all through. And during the pandemic, we were able to launch our digital loan. During the pandemic, we were able to perfect our savings, our digital savings product. And in fact, in the last 1 year, we disbursed a total of 18.3 billion, which is an equivalent of $45 million in loan, even in spite of the lockdown. So because we're able to change the way we serve our customers, working more on using digital channels, we're able to navigate the challenges. The second thing we did very well was when we anticipated that there was going to be some serious dimension to this pandemic, we raised liquidity. And we had substantial debt liquidity to run our business. At the point, our liquidity was over 110%. Now you will see, like Shama said, that does not sound very efficient when you have so much liquidity, but it was the best thing to do to err on the side of caution during the pandemic. Another novelty we did was to look at the schools and the school owners, because we know that since last year they've been on lockdown, till now they've been on lockdown. And we had to take some of the backlash from the school owners, actually we gave them 150 days moratorium. That's 5 months moratorium with zero interest on their loans because we want them to survive. And that's our way of giving that to the schools. And to our other customers, we saw a change, we saw fear, and we were communicating with them. We introduced an SME doctor program, that is the small medium enterprise doctor program, where we bring in experts to speak to our customers virtually and to tell them the best ways to navigate the pandemic and overcome the challenges of the pandemic during the lockdown. And some of them have come back, and then some of them are bouncing back in their businesses. So those are some of the things that we've done. We also extended moratorium for most of our customers up to 160 days. But I think what we did that really helped was, beyond attending to our customers, we took the leadership position in the industry. We have about 800 microfinance banks in Nigeria, and we were bringing in experts to speak to them on how to survive the challenge of the pandemic. So we didn't want to emerge the only winner. We want the industry to emerge an equal winner during this pandemic, and that really helped.
Thank you, Taiwo. Kurt, you already talked a little bit about what changes Banco Sol has made, going, of course, much more aggressively into virtual lending. But pick anything else, pick another challenge and how you've addressed it. But one thing I thought of, obviously being on the board, is given the length of the moratorium that still continues, how have you and your team been able to stay in touch with the clients? How do you have a sense of how the clients are doing, and how are you preparing for the future in terms of collections and when they come back to business? And how are you helping the ones whose businesses are struggling?
Well, last year we had a lockdown, and it was almost an 8-month lockdown, so that made it very difficult. We couldn't actually visit our clients physically, but we used our mobile communications. We used Zoom. We used different things, and it was surprising how our clients, being from the micro sector, actually readapted themselves to using these technologies. So a very high percentage of our clients do have smartphones, which is an advantage, and that's something that we use to communicate with them. And then later, by the end of the year, September, October, when the country started reopening, then we actually visit them. We visited them in their stores, in their shops. we took a number of surveys, of interviews, checking on how the situation was with the business, how they had been affected. First, of course, we wanted to know in terms of health, how they were doing, their families, and then the business itself to measure the impact of COVID. That's something that we are still doing. And it's something that our clients have really valued, have appreciated. At a certain point, we were also helping them with food supplies. We were giving them basic things that that we knew they needed: rice, sugar, things like that. For all those who were making the effort to come to the bank and to repay, to do voluntary repayments, it was kind of an incentive that we gave to them, and it was very much appreciated. And that also caused others to go to the bank and to do repayments. You know that in our segment, those kinds of incentives actually do help. People appreciate that, and they knew that the bank was making the effort, and in a way to compensate for that, they would come and actually, in many cases, do repayments. Now, as I was explaining before, the idea is to deepen the virtual methodologies, to use a lot of technology to reach our clients, to be close to them. Today, and with this new government, we know that there's not going to be a lockdown, which is an advantage, but also a disadvantage, because we're seeing the second wave of the pandemic moving very fast. And so our clients are in their shops, in their stores. The economy is starting to move, yes, but the exposure to COVID is more significant. And that's something that we are also noticing in our own people, in our staff. Just to give you an idea, at the peak of the first wave, we had people that got ill at a rate of, at a percentage of 15, 18% of our total staff. Right now, with 2-3 weeks into the second wave, we're looking at figures of 35% of people getting sick of our staff in the bank. So that definitely is going to be a challenge, because we want to keep them safe. And of course, talking about flexibility, I think that's one of the things that we have learned in this whole period. We're going back to opening and closing branches. We're going back to turns of people. We're going back to being able to open a branch with a third of the capacity. So those are the kinds of things that we have learned, and that we know that we have to remain very, very flexible today.
Thank you, Kurt. For each of you, maybe one more question looking back before we look forward, and then to the audience, we'll open up for more questions in the last half hour, so feel free to write them down. So one more question looking back that, for full disclosure, we haven't prepped you, but it's a very specific question. And I'll start with you, Shamak. You're quick on your feet. So looking back at the nine months, what would you have done different? Knowing what you know today, what would you have done differently?
Yeah, well, I mean, it just turned out such. I think there was, I think the level of fear that we sort of went with into this would have probably been a little lesser if we knew this was going to turn out like this. And there were things we did that were totally not necessary at an institutional level. In terms of we never shut down, but then our clients were affected, our investors were not all available, and there was some level of sort of slowing down that happened everywhere. If we knew this is how it was going to turn out, we would have probably been a little more adventurous, if I may use that word. But then again, that's wisdom in hindsight, Esteban. I don't know whether that would have been sort of any different. I can definitely say that going forward, and not particularly from a strategic perspective, But I think one of the things that we really learned is we don't really need to travel as much as we do to really run this business. And I'm hoping that some of those lessons will carry forward in terms of efficiencies, in terms of better life, quality, and so on and so forth. And importantly, what really happened during the pandemic was that we all were doing different things. We stopped working in silos and we became one team. Everybody was doing everything. And in some sense, it felt like being a startup again. And we would like to keep some of that action going forward.
That's great. Thank you. Taiwo, how about you? Given what we know today, what one thing you would have done differently? Or two?
Yes. Well, I think we've taken major decisions that are right steps in the right direction. And looking back, I would have loved to do that earlier. So number one for me is to diversify the income base um, from purely credit. And so I've realized that even once you deploy your digital technology, even from payment, from providing services, payment services, you can also make a lot of income from that. Um, so what I would be looking at is the speed of delivery on our digital strategy. And it's not yet over, really. Looking at the next wave of the pandemic, looking at how Africa is shaping up for the next one, we're not leaving any stone unturned to ensure that the digital strategy is perfected, the payment channels are perfected, and customers can be served remotely from wherever they are. And that's going to be the focus. That has been the focus. That's going to be the focus that I want to close on very quickly.
Great. Thank you, Taiwo. And Kurt, last with you. I don't think I've asked you that question before. So given everything we know, what should we have done differently?
I think that one of the things would have been to start training our clients earlier on the digital methodologies, solutions that we have already in place for them. So our app, for example, our online banking, something that we were promoting, yes, but our clients would come to the branches, get their passwords, get their users, but then they would go back home and not use them. I mean, this is pre-COVID. And so if we would have been more aggressive in showing them the advantages, I think they would have been able to start banking with us earlier in the pandemic. That took us longer. We actually made the effort on that, but 2-3 months into the pandemic. So we kind of lost time there. But I think at the end, we recovered. We recovered because they saw that since we were in a lockdown, it was a very efficient way to communicate, to transact with the bank. But maybe that's one thing that I kept thinking that we should have moved earlier on those solutions.
Great, thank you. All right, let's go to the present and the future now a little bit. Shama, tell us a little bit what's the strategy for Northern Arc today for focusing on 2021, but the next few years, and just touch on how is your strategic thinking now different than it would have been before the pandemic?
That's right. So a few things have happened. I hope yeah, that's right. So a few things have happened, right? So like I mentioned, I think one of the big change that happened is that we all moved almost entirely to 100% digital business. And because we work with hundreds of investors on the one side, I'm talking about debt capital markets investors and hundreds of clients, institutional clients, and many borrowers on the other side. In some sense, I don't think our business will be 100% digital ever, because we can only be digital when the entire chain becomes digital. So today what's happened is, to whatever extent we can be digital as a platform, we are digital. We are enabled to be 100% digital, but we are not quite there. So I think that's the big change that has happened. In some sense, I do believe that we can lead the way towards more digitization at all parts of the supply chains, and whether it's with investors, whether it's with clients, And I do see that going forward, that's something that we will want to push a lot more, in whichever way we can, let's say push, enable, encourage. And I think that will be good for everybody. So that's a fundamental shift that has happened. In terms of, where the business model could change, I don't think there are fundamental changes in the business model. I do see some change in the opportunity set. For example, I see that there is going to be a lot of move towards entrepreneurship, and I'm seeing it as we speak. It's happening across the board. It's happening with clients. It's happening with our investors. It's happening with households. It's happening with our own employees. So, we're seeing sort of a lot more people willing to take a lot more risk. And in some sense, for me, it's been a fascinating experience. We went with the pandemic completely frightened of where the world was going, thinking it was going to be doomsday, completely being, sort of conservative and saying, okay, fine, this is it. I need to conserve my savings and my wealth and my family and everything I own, and see where this goes. But coming out of it, as it were, and not all of us have come out of the pandemic yet, I see that significant shift saying, this is one life I have and I want to do more with it. And I'm seeing a lot more of that in people around me. And I think that's going to open a fascinating opportunity set. We will see new ideas, new businesses coming up, people doing more than they would have done if not for the pandemic. And I think I see that as an opportunity. I see that as an opportunity for Northern Arc, certainly an opportunity for Axion and many of the, sort of impact investors out there, because a lot of support is going to be required as we see more of this entrepreneurship building up. I see that as a big change for Northern Arc.
I couldn't agree more with you, Shama. So thank you for those comments. Taiwan, Kurt, with both of you being more, in a good sense of the word, traditionally excellent microfinance institutions, and you both mentioned digital transformation and digital acceleration. Starting with you, Taiwo, do you see over the next few years a huge decrease in branches, a huge decrease in touch, and an acceleration of tech? Or do you think you'll continue with a mix of tech and touch and continue the same level of branches? How much of a transformation, radical transformation, do you expect?
If I put it on a scale of 1 to 10, I think I'll pitch at 7, the kind of radical transformation. Now, I want to align with Shama that it's not going to be 100% digital unless the whole economy becomes digital. But then what you're going to see is a fusion of touch and tech, but now with some bit of a difference. So for Axion Microfinance Bank, what we're going to do is, rather than see us multiply branches, you might even get to see us reduce our business model. Our business model would look at reducing the number of branches and using more of agents to reach our customers, because you can multiply agents very, very quickly. And we've started doing that. We've started collaborating with agents to be able to reach customers who are very slow in taking up the digital challenge and in taking up the digital journey. But then digital is critical. We're educating our customers. And the interesting thing is that there is a significant change in customer behavior, in the way they want to be served, in the way they want to be reached. And it's actually the digital space that can actually address some of those challenges that the customers are posing. So I see a significant change, but we're going to have a combination of digital, branches, and of course, using a lot of agents to be able to serve our customers.
Esteban, you're on mute.
This time it's me. I have the same confusion function. Too much Zoom. Kurt, how about you? How do you see Banco Sol in 2025, and how different do you think it will be from today?
I think technology is going to help. I think technology is going to become a very powerful tool, but microfinance is high touch. Microfinance, your clients expect you to visit them, to see them, to have a personal relation. So it does help. And in times like COVID, definitely, we've been there. I talked to you a little bit about that. We lent virtually. But at the end of the day, I think that there's, in my view, it's difficult to think that it'll become all virtual, all technology. And maybe our clients don't want that either. They want the relation. They want the loan officers to pay attention to them, to see them, to follow up on them. I think this is the basis of microfinance. And again, I think it'll be a combination. We might have a segment of younger clients that are more willing to use more technology and to be related to the organization, to the bank in that way. But I think that many of our clients are still for the relation and the high touch that we've always had with them. So I see a mix. I see a mix, and it'll depend on the segment of clients that we reach. And again, I think the younger ones are going to be the ones that are going to be more willing to use technology. The more traditional, the older clients are going to remain with the personal relation.
Actually, Kurt, that relates to a question that one of our board members, Ron, just asked. And let me read the question and you can each comment. In the United States, we have a major digital divide, which has a dramatic impact on the bottom of our pyramid, meaning it divides people, right? So the ones that have access and know, and you were just touching on that, Kurt, in some ways before, the clients that are used to doing that or not. How will that impact all of you in Bolivia and Nigeria and India? Do you think digitalization would leave people behind? And in a way, it touches, Kurt, on what you were just talking about. So I don't know if starting with you, Kurt, and then we'll go backwards.
We're seeing a lot more people using technology. I also mentioned before, the last measure we had showed us that 70% of our clients had digital phones already, smartphones. So that's a big advance. But I don't see all of them really banking only through digital channels. And in our countries, I think that the technology in general is also a limitation. If we talk about our rural clients, it's one situation. But if we talk about our urban clients, then of course, technology is more available. So yes, there is the digital divide. And again, I think it's going to be by segments.
Yeah, I tend to see similarly. Taiwo, what about in Nigeria? Do you see a digital divide? And perhaps knowing a little bit, I could see Lagos being one thing, but as Kurt said, the rural Nigeria and the rest of Africa may be very different.
So I think the evolving digital innovation that you see is actually the so it depends on which customer segment you want to serve. Even the use of feature phones also enables technology, the USSD. And again, like I said in our own strategy, yes, there's going to be a digital divide, but you can bring these together. So what are we doing? Number one is with working with agents. So in the rural areas and the peri-urban areas, you have agents. Even in Lagos, you are going to drive agency banking, where customers can go and do their cash in, cash out. They don't have to look for. So you still take the services close to the customer. And again, we have looked at it, and the statistics look similar to Cox, because over 70% of our customers use smartphone too. And they're actually excited. They want to be served digitally. And so for the older customers, We're going to provide them an alternative with the agents to work with. And we're going to provide them an alternative with the feature phones to do basic payment transaction on their phone and still have the touch. So if why do customers come to the branch? What kind of transaction? For payments, to take loans, to make deposits, to make withdrawals. So when you take out the payments, when you take out the deposits, when you take out the withdrawals, uh, then you're left with a loan. And most of the customers who come to the bank actually come because of loans. So it made it very difficult to digitize that bit. But the others can be fully digitized. And then we move on the journey to see how we can bridge that digital divide.
Thank you, Taiwan. And Shama, what about in India? I think it's an interesting question for India. Are you concerned about that? Do you see the digital divide shrinking or widening?
No, I think in the immediate run, I am a little concerned. It's like what I started up with, right? Saying that, if right to education starts with owning a smartphone, then you will have a whole range of young children who will be deprived of education. And I think that's not a great place to start. But in the long run, I'm not thinking about digital as only having access to a phone or in some sense, a digital footprint, which is very, very directly associated with the client. I'm really looking at data as a very powerful tool to be able to lend, to be able to provide financial services for people who today are outside the purview of financial services. And I believe that as that digital revolution starts percolating downwards, we'll find different ways to use that digital trail, that digital footprint in ways to develop products that actually meet the requirements of our clients much better. And I see the power of data, the power of, and I'm not just talking about the fintechs now. And I believe the fintechs are dealing with a very, very small part of what is the opportunity available, both in terms of, I'd say, a business opportunity as well as impact. As this really trickles down and percolates to the bottom of the pyramid, we will see this completely throwing up new opportunities. And it could take financial inclusion to a very, very different level. And, let me just give a quick example of what we saw of what Credit Bureau did in India, right? I mean, India is one of the few countries in the world where $100 loan starts being reported on Credit Bureau. And when this happened 5-6 years ago, there was a lot of unhappiness saying, okay, this is too much of reporting. Why do we need to do this? And so on and so forth. But look at the kind of information it created about the credibility of a small borrower. And I think that's the power of data. And I believe that that's really what the digital revolution will throw up. We are not too far away from that. And so I'm seeing it in a very positive light.
Yeah, agreed. Thank you, Shama. As we begin to wrap up, again, I encourage the audience to add any more questions you may have. We have a few more minutes. And as we do that, let me ask you to each of you one of my favorite questions going forward. Shama, I'll start with you again. But I know you, so I'm asking this question with some trepidation. But what is your sleepless night tonight? What are you most worried about right now? And what are you doing about it?
I mean, it's not one thing, it's a lot of it's a lot of things. Honestly, I can tell you what I'm not worried about. I don't think I will ever be in that same state of mind I was in 8-9 months ago. I think I've seen, when I say it's not just me, it's me, people around me, institutions, my clients, and so on and so forth. So I don't think we will get there. I think we've seen the worst from that point of view. We've seen that we have the capability, we have the ability to really sort of live through that in some ways. And we will not get in that fearful state of mind for this reason. Again, there could be new reasons, but I don't think the pandemic is a reason that we will get there. What keeps me awake? Just too many things right now, Esteban. It's like I said, we've gone through such a difficult time as humanity, as an institution, as a country. There's just too many things that are happening. I mean, immediately I'm just thinking of how to bring my people back to office and bring them back safely. On one level, we don't want to put the pressures, we don't want to force them to come to office, but on the second, on the other hand, life needs to move back to normal. So how do we do that, using technology and everything else? How do we get back to 100% efficiency?
Yeah. Kurt, how about you? I think all three of you, like me, worry all the time. So I know we have multiple worries, but what's one thing that's keeping you up?
Well, for us, another extension of the moratorium. That's one key issue that you can imagine. After 10 months and another 6, I don't know, in other realities, in other countries, how would, in general, financial intermediaries survive? And without having the proper compensation or the proper programs from the government in injecting liquidity to compensate for that. So I think that's one of the bigger concerns. Fortunately for us as Banco Sol, we have remained very liquid. We took the measures months ago to have a significant volume of liquidity. But at the end of the day, we're part of a system. And if the smaller organizations start having problems, then that might have a chain effect. So definitely an additional moratorium. Having had 10 months, we're talking about 6 additional months. That would be really be very, very bad for the financial system in Bolivia.
Yeah, thank you. And Taiwo, how about you?
Yeah, I think it's my customers really. So we serve customers who are at the bottom of the pyramid, who are very vulnerable to what has happened. And a lot of them have closed shops because of what has happened. I mean, I salute the resilience of some of them who has kept on, but we've done a lot of surveys. We've done a lot of questionnaires. We've communicated and over-communicate with our customers. And one fear that remains with me is that with the new wave of the pandemic, if they have to shut down their businesses again for any prolonged time, then that business may cease to exist. And I exist because of them. So I'm just looking at how the customers will survive. And I hope there's not going to be another lockdown.
Thank you.
Or prolonged lockdown.
One last round. Among the audience that we have, about 200 people, we have some other microfinance organizations here from all over the world. One piece of advice, again, starting with you, Shama, what advice would you give, not to put you on the spot, but again, what a lesson learned that turns into advice going forward?
Oh, yeah, you have put me in a spot actually. No, I think the lesson we've learned is that, particularly in bad times like this, there is so much help that is available around us, and in some ways, even in the worst of these times, we are not alone. So, from the point of view of potentially new products, new lenders, new investors, I've seen this particular period, particularly as far as our clients are concerned and as far as Northern Arc is concerned, as a great period of collaboration. I've never seen this much unity as I have seen this period across, the financial sector in India. And I think that's what really is very, very encouraging. You go through a bad time and we go through it together. And I think that would be my advice. I mean, you're just never alone. I don't know whether that helps, but this is the sense I got through this.
I think it's helpful. Taiwo, anything from you?
Yeah, I'll tell my colleagues, be very positive and think digital. Think digital. It's going to help a lot to reach the customer.
Agreed. And Kurt, last but not least, you. Any advice?
Well, for us, I think that these difficult times have showed the importance of team coherence, working together, being flexible, helping each other. During the lockdown period, we were asked to remain open as banks, to pay different government subsidies, and people were getting sick. So we saw a lot of solidarity. We saw our teams getting closer together. That's one thing that we have come to value very much. And going to the second wave now, remain like that, remain positive. We keep training them. We are using support to make them feel that they have the bank behind them should anything happen. So I would say that keeping the teams together is something very, very important in these times.
Thank you all. Let me ask now my colleague John Fisher. As I think most of you know him, he runs Accion's global investments. We have a portfolio in more than 30 countries, and we see a lot. So I've asked John to prepare some reflections on what we have seen, what he has seen over the last year, and what he sees going forward. And if time allows, then quickly, perhaps Shama, Kurt, and Taiwo, some final comments. So John?
Thank you, Esteban, and thank you very much, Taiwo, Shama, Kurt, for participating, and thanks to the 200-some participants we had. It looked like a very comprehensive list from countries all around the world, as well as investors, operators, regulators, funders. So a lot of interest in this, and I'm sure they all appreciated your insights. And perhaps to reflect a little bit on the comments and our own thinking internally, I do think there's a wide consensus within Accion, within this group of panelists, that we were all very sober at the beginning of COVID, and while the effects have been enormous, I think that soberness at the beginning has led us to be better prepared. And in reality, the effects were somewhat shallower than we had anticipated. But I think, as Esteban, you might mention at the beginning, this is perhaps more prolonged than we had anticipated. I don't think anybody thought that we would be here in January thinking about 6 more months of moratorium in Bolivia when this started back in April. I think one of the things that has occurred to us at Accion, and I think Shama, you highlighted it, and Taiwo, you mentioned it as well, is really this outsized impact that this has on certain very vulnerable populations, women, children, the very poorest, the digitally excluded, and really being conscious that all of our missions are to serve those people and help those people in these difficult times, and I think this group has been well positioned to try to have an impact on those populations in these difficult times, and I think Shama referred to it as luck. I'm a firm believer in this idea that luck is the residue of design, and certainly all of these institutions that we have panelists from were very thoughtful about being prepared with equity, being prepared with liquidity, in order to be able to do some of the support to those vulnerable populations, like Taiwo mentioned, of being able to forgive interest on school loans in order to be able to support those businesses that were very hard hit by the pandemic and have had to be closed throughout this period, or as Kurt mentioned, providing food to clients who really needed that support from the bank. I think the other element that certainly is very top of mind for Accion is the technology element, and I think that came through in all of the comments about the importance of being prepared for remote learning, remote working, being prepared for digital lending, digital payments, and the impact that all of that is going to have on the financial inclusion industry more longer term. And clearly, I think all of you have been thinking very deeply about this combination of tech and touch, and this fact that I think within Accion, we very much recognize that while there may be some populations, as Kurt referred to, perhaps younger generation, more digitally savvy populations that may be very quick to jump into digital financial services. There are many clients who we serve today who don't have that ability, don't have that capacity, need education in order to be able to get online, need support in that, and really do appreciate the combination of tech and touch. And so I think the challenge that all of our entities around the world is facing is how to reap the most from the efficiencies that digital provides without excluding populations that don't have access for whatever reason, whether it's because of gender, because of age, because of access to technology, education, etc. And so that that ability to be prepared in terms of financial resources, be prepared in terms of technology resources, I think resonates with us internally, resonates I think across this panel, and then I think Taiwo referred to this, and this is something that's top of mind for us. We're all, as Shama said, exhausted by this this pandemic, but as we are hopefully with vaccines coming eventually during 2021, moving out of that scenario, thinking about how we continue on beyond the pandemic and those lasting effects that can be had. And I think some of it is this combination of tech and touch, redesign of the business model to get more efficiency while not giving up that personal contact that's been the hallmark of financial inclusion for decades. But then also figuring out ways that we can support what Shama referred to as the move to entrepreneurship. I mean, this is something that is very near to and dear to the heart of Action, all of the work that we've been doing on the fintech side with the seed stage fintechs, growth stage fintechs, that entrepreneurship is key, but also figuring out in more established regulated institutions, how to generate that entrepreneurship in order to change business models, reach out to new segments, reach out to people who are perhaps taking greater risk in new businesses as they reinvent themselves, as Kurt was indicating, and Taiwo was indicating that many of our end clients are trying to do. So I think all of these reflections that the panel had are very consistent with the reflections we've had internally. I do think there is perhaps going forward a bias that will be reinforced, a bias that will be reinforced towards larger entities that are do have the capacity and equity and liquidity and contacts and technology in order to be able to survive this kind of pandemic and any future long tail events that we may see coming down the road. Hopefully not future pandemics, but I think we all need to add into our risk charts things that we had never contemplated before and make sure that we're contemplating them for the future. But I think there will be a bias to large, well-funded entities that are able to invest and hopefully, as Shama said, we won't see the folding up of many of the smaller businesses. But one of the things that we are seeing, unfortunately, around the world in many countries is some of the smaller entities that are unable to rebound after this and are looking for ways to partner, to merge, to do a business combination with other entities. And I think we're anticipating there will be a wave of those mergers, acquisitions, et cetera, going forward. And there will be a need. I think there was one question about do we see a problem with insolvency down the road? I think there will be an increasing issue of insolvency in those smaller, weaker entities. that will either need to get new capital coming in, or will have to do a business combination with others. And so I think that is one of the perhaps it leads to more efficiency, perhaps it leads to better operations. I think what we want to make sure we don't lose is the element that Shama mentioned of financial institutions that are serving specific niches, that are serving lower income clients, that those don't fold and those clients are left out. So I think in summary, I think we still have a ways to go, and we will have to see how 2021 plays out. I think we're cautiously optimistic that at least the bulk of the entities that Accion has invested in will move out of this difficult period, and will move out of it able to continue supporting the clients that their mission and vision has dictated that they should be supporting, and will be able to hopefully serve them better and serve them better through leveraging data, leveraging technology, leveraging remote working, etc. So I'll stop there, and thank you all very much for the participation.
Thank you, John, for your thoughtful comments. I don't know, we have 30 seconds. Kurt, Shama, Taiwo, if you want any parting remarks.
Can I make a quick comment, Esteban?
Absolutely.
All right. So I was just thinking, if we look at it from sort of a formal institutional level, and all of us here on this call, the 200 plus, we really fall in that category. There's been a systemic shift that COVID has caused, right? So there was COVID, there was work from home, and that eventually resulted into digitally, technologically empowered institutions, either today or tomorrow, but that's going to happen. And that's the journey I see happening from COVID going into the future. A question that I don't have a clear answer to is really, what is the impact that this has at the grassroots? How have households dealt with it? So let me just take an example. There's a household, there's COVID, there is no work from home, because at the household level, and particularly for the sectors we target with, it is really joblessness. So COVID, joblessness, and then what? I'm still not clear about the then what for most of the world. And I think that's an answer we really need. I think for all of us here, institutions, we will go through ups and downs, and we will end up in a good place technologically, digitally. It would be great to see where households will end up. And I think that's really the responsibility we all carry.
Thank you, Shama. That's very well put. Again, 30 seconds, Kurt or Taiwo, you don't have to.
Yeah, thank you. Shama, thank you very much for, you pitched excellently. And that's always been my concern too. And what we did was, again, to think for the customer. Because like I said, the survival of the business depends on the customer. So what we've done is to take a few of our customers and partner with online commercial stores and online platforms where they can also sell their products and services. We're onboarding about 4,000 of them. We've reached agreement with an online platform, and they will be able to also sell their products and sell their services online. So even if there's a lockdown, they can still make sales online. I think we think that impact will go a long way to help business still survive.
Thank you, Taiwo. And Kurt?
Well, to summarize, I think that for us, technology, yes, with a combination of high touch, is going to remain there. Efficiency, definitely with shrinking margins that we're going to be seeing. Liquidity, definitely one of the big elements in Bolivia's case. And then I think that scale is something that we have to always consider. The larger organizations are going to be the ones that are going to be better fit to face not only COVID, but any negative situation that we might have in the future. We mentioned that the smaller organizations are the ones that are going to be hit harder. And so I think that in our business plans and thinking about the future, volume has to be one of the key elements that will protect our organizations from all different risks.
Thank you, Kurt. Thank you, Taiwo. Thank you, Shama. As part of Acción, I'm privileged to work with each of you. It's an honor to have you here. We are fortunate to have leaders like you, truly, in the financial inclusion space. You each are individual leaders. Your institutions are leaders. I hope our audience got to see that. And more than that, I hope you can all see we believe really our work is more important than ever. So to all of you who support Acción, who work with Acción, who work with these three institutions, thank you. We need your support more than ever. And I know I can speak for the five of us. The five of us don't see our jobs, our work as work. This is part of who we are. This is part of our lives. This is part of our values. And we are privileged to be making a real difference in people's lives. And again, Taiwo, Shama, Kurt, thank you very much. And thank you to our audience, and all the best for 2021 to everybody. So have a good day, and hope to see you again down the road. Thank you.
Thank you.
Thank you, Esteban.
Thank you.